the economy expands in line with potential in the sort of 1.5% to 2% range. And as we go into 2020, we would expect something similar, maybe a little bit stronger, because I do think that overall financial conditions are becoming a little bit more supportive. You can see that in some of the more leading indicators, like the housing sector has clearly started to improve, but there are some risks for sure, and the pretty sour mood in the business sector that we're seeing in some of these surveys is something to watch.
And so we have yields lowering, interest rates coming down, which might help with the mortgages and people who want to go into housing. On the other hand, you have wage growth stagnating. How does that play into what you're seeing for the future? Well,
I think today's very weak wage number was a bit of an outlier. Generally, what we've seen is sort of very slow and steady acceleration in wage growth from the 1.5% range, 1.5 to 2, 5, 6, 7 years ago, to the 3 to 3.5% range. This one was a weaker number, but I wouldn't put too much weight on it because we actually have quite a lot of other wage indicators that have continued to show gradual acceleration. So if we continue to see these kinds of numbers, I'd put more weight on it, but right now it's premature, I think.
You talk about the difference between survey sentiment and voting with your feet, but we have seen them vote with their feet, at least businesses, on CapEx. So what is the difference between being more conservative on CapEx and actual hiring of employees?
I think CapEx has been on the soft side. It hasn't been terrible, but it has definitely been somewhat weaker. I think that probably some of that is related to more special factors, like for example, the slowdown in the shale industry. That's had an impact on energy structures. But yeah, I would agree that there's a little bit of a gap between what you see in the hiring numbers and what you see in the CapEx numbers. Although hiring, of course, has slowed. I mean, nobody's arguing with the idea that hiring has slowed from where it was. Last year, we had, on average, 220,000 new jobs per month. In the last 3 to 6 months, it's been about 150, so definitely weaker.
Kudlow's on the tape this morning saying that the economy's suffered, I think that was the word he uses, from monetary tightness. How much more should the Fed do?
Well, I think the economy is growing more slowly this year. I think there are a number of reasons for that. Financial conditions did slow down growth, I think, in Q4 and Q1 of this year. In our view, that's actually abating. So the Fed kind of transmission through financial conditions is actually becoming less negative, and we think actually it's probably going to be a little bit more positive as we go into 2020. So at the moment, I'm actually seeing a little bit more of a positive impulse. What should they do? I think there are arguments for holding, there are arguments for going, but I think what they will do is pretty clearly that they will cut one more time, because the guidance from the Federal Reserve seems to be pretty strong. Chair Powell talks about a mid-cycle adjustment, 1990s style. Those were 75 basis points in total. So we would expect another cut at the October meeting.
When we're talking about the trade war and the impact it has on domestic economy, we're starting to hear more companies bring that up in their earnings calls as a significant headwind. You're seeing it in the survey indicators as well. How important is it for these trade issues to be resolved and remove that as a challenge to growth?
Well, I think it is a drag on growth, and it's a little hard to estimate. I think you have a pretty large kind of range around the central estimate, but our central estimate is that the trade tensions are subtracting something like 0.5 percentage point from growth at the moment. So without those trade tensions, we'd be not at trend, but modestly above trend. That's our central estimate. And what we're assuming is that as we go into 2020, some of this tension diminishes as the trade negotiations maybe get put on the back burner a little bit more. But I do think it's a downside risk that needs to be watched. If we see continued escalation, then that would mean potentially still trend or even below trend growth in 2020.
Is it fun right now trying to quantify the impact of either the election dynamic that we're getting into or the impeachment inquiry dynamic that we're in?
I mean, it's pretty difficult to use economic indicators and economic data to do that. You can, of course, we do watch sentiment indicators, as we've discussed, and they can be affected by political developments, but it's hard to do sort of hard analysis on how big that impact is. So I don't know if it's the fun of doing the job at the moment. It is a factor, but it's not a factor that lends itself very easily to economic analysis.
Jan, good stuff. Covered a lot of ground in a short period of time. Good to see you,
Thank you.
Always. Jan Hatzius.
Well, we're keeping an eye on WeWork, of course, the private company whose plans to go public went up in flames a couple of weeks back, of course. The question now is the two new leaders of the company and their plan to try to at least stem the losses at WeWork, of course, through cutting of non-essential businesses and potential layoffs. Another key that the company is looking at, according to my reporting, is raising more capital. And as you might expect, of course, its former lead underwriters, JP Morgan and Goldman Sachs, for its one-time IPO, are still focused on that front in terms of raising billions in additional capital for a company that burns money very, very quickly. How could it be done? How quickly can it be done remains a question. Remember as well, there is a consortium of banks, or a number of banks, including JP Morgan, that have margin loans to Mr. Newman, the founder of WeWork, who stepped aside as its CEO very recently. You might look to JPM and Goldman Sachs to do some sort of a financing where they would be fairly high in terms of the stack of creditors, try and restructure things, get warrants. We don't know at this point, but we are watching closely because they're under a lot of pressure, these two new CEOs.
There was two things that struck me just in reading about how the deal went down and what's ahead for this company. One is that it's a company that invests in long-term real estate assets for short-term leases, and that there might be a disconnect in the actual model here. The second thing is, now you have two co-chief executives trying to cobble together an approach forward. And how difficult might that make it to come up with something that's cohesive and really attractive to investors?
Both good points. Both good points. I mean, the question of the business model, of course, has been one that people have asked for quite some time. And it was an incumbent upon the company and Mr. Newman to come with a much cleaner-looking S1 when it came to governance, which they weren't able to do. And then when we learned really beyond even what was actually disclosed at a number of different things, certainly investors said, no way. We can't accept that. As for co-CEOs, it is not a typical thing. They are taking on different parts of the business. They present a decent face at this point, but we haven't really heard from them. Not that they have to communicate publicly. It's not a public company. But you raised some interesting points.
All right, guys, we're going to watch that and wait for confirmation of some of these reports.
Yeah, we'll see. I mean, it could be days or weeks, but at some point there's going to be a large financing or there's going to be capital problem.
They've said we're preparing for tough decisions. When we come back, tobacco giant Altria, speaking of tough decisions, launching their newest devices, IQOS, amid public panic over the vaping lung disease. Where that company goes from here when Squawk on the Street comes back.
Johnson & Johnson. The biggest cat in the world was longer than a cricket bat. Think that's big? Tonight's Euro Millions jackpot is an unmissable £169 million. 169 million! Now that's big.
Euro Millions from the National Lottery. Amazing starts here.
Estimated jackpot is capped at 190 million euros. Rules and procedures apply. Players must be 16 or over.
Otto Sergey now checks for better energy deals so you don't have to. Meaning we can all sit back and relax. Can't we, Sergey? Sergey?
Hey? What?
Tell the people that we can sit back and relax.
Oh, we can sit back and relax.
Oh, don't waste energy worrying about energy. Automate it with Otto Sergey. Compare the market. Keep life simple.
Customer preferences determine alerts based on tariff type, payment type, supplier rating, and minimum annual saving of £50.
Welcome aboard Europe's 169th safest airline.
You were like my 169th biggest crush in school.
Your total body age is 169.
The number 169 never screamed glamour until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. 3,487 £167.50 optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Swoon before the year is out. One top investor makes the case on tradingnation.cnbc.com. More Squawk on the Street is coming up.
Carl, I appreciate the invite here. As my broker.
I want Poppy to play cricket for England.
I want Sam to stop screaming.
I want Joe to live a little.
I want Naomi to live a lot.
I want Becky to invent a cure for the common cold.
Whatever the future holds for your children, Vitality Life Insurance want to make it happy, healthy and secure. So when you take out our Wellness Optimizer, you'll get up to 40% off your life insurance premiums.
I want the twins to keep on being happy.
I just want whatever the twins are on.
Just search Vitality Life Insurance. Additional product, minimum monthly premiums and conditions apply.
Streaming wars continuing to heat up. We got some news on Disney versus Netflix, I think it's fair to say, Julia Borston. She has, of course.
Well, David, we have been talking a lot about how Disney Plus that is launching November 12th will be competing with Netflix. And now the Wall Street Journal is reporting that Disney is banning Netflix ads from across its TV networks. This we've reached out to Disney. We're also reaching out to Netflix to confirm this report in the Journal. But this comes as both Disney and Netflix spend, tens if not hundreds of millions of dollars in marketing to try to draw people to their new subscription services. Netflix reported $1.8 billion in advertising last year. So certainly they would want to advertise on ABC and these other services, including potentially Hulu. We'll see if they do that as well. So the question now is whether Disney will confirm that they are banning Netflix ads from their various platforms. Guys, back over to you.
Yeah, that's a lot. That's a lot of platforms. It's not just Hulu, obviously. It's ESPN.
It's
Nat
ESPN.
Geo, FX,
it's ABC.
Yeah.
Exactly. They have their cable networks, they have their broadcast networks, but even if you just look at the advertising heft of a network such as ABC, this is a huge platform where Netflix would be able to reach potential subscribers. So it would definitely be a blow to Netflix if they actually follow through with that across all their platforms.
All right, Julia, thank you for that.
Netflix shares are now just down fractionally.
Oh, okay. Thank you for pointing that out. Appreciate that. Let's get over to the CME now and Rick Santelli for the Santelli Exchange. Hi, Rick.
Good morning, and thank you. It's always been about jobs, 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 and today, no exception. I found it an exciting report, but in my opinion, exciting isn't necessarily synonymous with a good report. And I'll tell you what continues to bug me, okay? Wages. Now, we've had some really sharp economists on, and they say the report, if you weren't aware of the isms, kind of vanilla. I'm not sure if I agree with that. A month-over-month wages at unchanged. That was the worst month-over-month level since October of 2017. On year-over-year wages at 2.9, they purged the 3% mark. Worst level since July of 2018. Now, granted, these aren't super long-term, but it is something to consider. Because I think today, if I had to give a trophy for what I thought was the best spot on TV today, it would go to Kate Rogers, South Carolina, Samsung. It raises an issue that we talked about quite a bit before the recent sort of slump started to grab on a little tighter, and that is part of the reason that jobs are going to be easing off is because there's just a lot of openings and not enough skills. Well, JOLTS is a number, and we'll be seeing it next week. It's a number that traders have never found all that enlightening, but it started in 2000, and you can see it's pretty much been going up for years. As a matter of fact, it has had a 7 million mark for so many months in a row. And the high, well, we are only 5% off the high from about 6 months ago, and the current level is 7,217,000. But these are still really interesting when you look at openings. Consider what Kate Rogers found at that Samsung appliance. So we're going to have Ed Lazier on next hour. We're going to ask him. Another thing that isn't necessarily part of the employment report, I call it the growth spread. We really need to watch this because boons are not dropping as fast as tens. And that tells us something. We're at a 20-month low with regard to where that spread is. We need to pay close attention. David Faber, back to you.
Okay, thank you, Rick. Let's send it over now to John Ford. He's got to look at what's coming up for us on Squawk Alley. John.
Hey, David. Well, we're going to continue to watch these markets in the wake of that jobs report. Higher, as you've mentioned many times. We also got the CEO of Vice Media after the acquisition earlier this week of Refinery 29. Going to check in on the media industry, digital media consolidating. That is coming up on Squawk Alley.
It's every municipal bond investor.
Jamie Theakston and Amanda Holden.
Hot breakfast. Tom Hanks is our special guest.
You're either being punished or rewarded. I'll let you decide.
I did do a whole show of grease on my front lawn when I was a kid. We charged everyone 10p. We raised a £5 and I gave it to Bishop's Waltham Gymnastics Club towards a new crash mat.
Do they get the crash mat?
I mean, it took a couple more years, but yeah.
It does happen to normal people like you. You've won £20,000. Well done.
I love this game.
Hot breakfast
with Jamie Theakston and Amanda Holden. Weekdays from 6:30. Listen on your radio, global player, or smart speaker.
Play hard.
Now, do I fancy dusted fondant or berry smoothie?
For paint inspiration and advice, get to B&Q with a huge range of colours from brands like Good Home, Dulux and our Valspar colour matching service. Plus, all the tools you need to get the job done. You can do it when you B&Q it. Colour matching in store only.
You don't just live in one room, so why should you Wi-Fi? With Sky Broadband's Wi-Fi guarantee, you'll get Wi-Fi in every room or money back. Perfect for food shopping in the bedroom, gaming in your PJs in the lounge, or streaming sci-fi movies in the kitchen. Get Sky's superfast broadband and Wi-Fi guarantee. £32 a month for 18 months with $19.95 setup. Click on the banner now.
Sky Fibre errors, Sky Kit required. Refund on boost component of subscription paid during current minimum term up to date of claim. Minimum 3 megabits per second or money back. Prices may change during minimum term. See sky.com/guarantee.
This is the Tune In Newsreel with top news stories from today.
Pepsi putting the fizz back into the company. Its shares are up thanks to an upbeat third quarter earnings report, which showed better than expected sales and profits. The snack and beverage giant's new chief executive has been ramping up investments in advertising, technology, and supply chains, and it paid off. And Kroger is slashing hundreds of middle management staffers. This is all part of an ongoing leadership evaluation.
Hear breaking news as it happens with live around-the-clock coverage from Fox News on TuneIn.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet and scores.
What's happening in college football this week? This Saturday, 2 undefeated SEC teams square off to see who is a college football playoff contender. Number 10 Florida welcomes number 7 Auburn to town at 3:30 p.m. Eastern. Just search college to listen today.
Device in the U.S. that heats tobacco instead of burning it, an attempt to give users the same nicotine rush but with fewer toxins. Our own Angelica Levito's back at Post 9 talk about what this means for Altria, for the product, for Juul, for vaping in general. Do we call it vaping?
It's not vaping because it actually uses real tobacco. E-cigarettes use liquid nicotine, so it does deliver nicotine, which is the addictive chemical in a cigarette. However, they don't contain tobacco.
All right, so what's new today? What happens now?
Yeah, so Altria is launching IQOS in Atlanta. It opened a store in Lenox Square Mall. It will open another store later this month. It will also have kiosks where you can buy the device. And so in these stores, you can test the product. They show you what it looks like, how to use it, and walk you through it. And there, a person can buy the device. And they'll sell the heat sticks, which are basically stubby cigarettes that go inside the device, at 500 stores throughout the Atlanta region. But you can only buy this product at the stores.
Do they avoid a lot of the regulatory issues that are in play for cigarettes already, or are coming into play with vaping, like age restrictions and flavored, they're trying to ban the flavored vaping products?
So what makes this unique is that it actually already went through the regulatory pathway. So the FDA reviewed the application for about 2 years before authorizing it for sale here in the U.S. And with that, it required many pretty strict marketing restrictions, including where it could be sold, how it could be sold, how they could advertise. Every time they want to market the product, they need to submit the plans to the FDA 30 days in advance. Every quarter, they need to submit sales data, and every year they need to submit even more data to the FDA. So the products, the heat sticks, will be available in regular tobacco, and 2 menthol variants. But otherwise, there's no flavors like there are in e-cigarettes.
This is a key undertaking, obviously, for Philip Morris International, which already has the product in other markets around the world. And now Altria in this partnership, obviously not going to own or merge with Altria as they've been talking about for some time, abandoning those talks. But it's still important for Philip Morris International here in this country.
Exactly, and the timing really couldn't be better. I mean, these companies have been working on this product since before they split in 2008, and now you finally see it in the U.S. Yes, they have it in 48 markets outside of the U.S., which have been pretty successful so far for Philip Morris, but the U.S., of course, is sort of seen as a bellwether. How will other regulatory agencies around the world view this product? How will they handle it? And of course, the U.S. is always an important market.
Is it better for you health-wise? Does it help you? Is it a replacement for cigarettes that's considered a healthier alternative?
So the FDA is still reviewing the application that would allow Philip Morris to market this as safer than a cigarette. However, in clearing this device for sale, they did say that their review found that the device produces fewer toxins. So that is one element of it, but they still cannot say that it's safer than a cigarette.
Finally, nicotine delivery, is it much different than an e-cigarette?
In terms of the nicotine delivery, you still get the nicotine. Altria would say that they think this is a better alternative for adults who like cigarettes. E-cigarettes don't give you that same taste of tobacco. They're very different. Mango and cigarettes, a little different, but this is actually tobacco.
Story evolves. Angelica, thank you. Watching e-cigarettes in the IQOS space now. When we come back, Apple shares higher on reports that they're boosting production of the 11. Stocks up more than 40% for the year, up another 2% today. Squawk Alley starts in 3 minutes.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Jamie Theakston and Amanda Holden.
Hot breakfast. Tom Hanks is our special guest.
You're either being punished or rewarded. I'll let you decide.
I did do a whole show of grease on my front lawn when I was a kid. We charged everyone 10p. We raised a fiver, and I gave it to Bishop's Waltham Gymnastics Club towards a new crash mat.
Do they get the crash mat?
I mean, it took a couple more years, but yeah.
It does happen to normal people like you. You've won £20,000. Well done.
I love this game.
Hot breakfast
with Jamie Theakston and Amanda Holden. Weekdays from 6:30. Listen on your radio, global player, or smart speaker.
Play hard.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every.
And it's a home run.
Single.
And gone.
Game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
From the TuneIn Studios, I'm Fonseca with your daily sports update. A lot of playoff action happening today. We've got Game 1, Rays-Astros. This one's at 2:05 p.m. Eastern. Game 2, Cards at the Braves. This one's at 4:37 p.m. Eastern. And then we got Game 1, Twins-Yankees. This one's at 7:07 p.m. Eastern. And then we've got Game 2, Nationals-Dodgers, 9:37 p.m. Eastern. If you want to catch all these games and find them, search MLB so you don't miss a moment of the action. That's your TuneIn Sports Update.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stands on his feet and scores.
What's happening in college football this week? This Saturday, 2 undefeated SEC teams square off to see who is a college football playoff contender. Number 10 Florida welcomes number 7 Auburn to town at 3:30 p.m. Eastern. Just search college to listen today.
This is the Tune In Newsreel with top news stories from today.
Pepsi putting the fizz back into the company. Its shares are up thanks to an upbeat third quarter earnings report, which showed better than expected sales and profits. The snack and beverage giant's new chief executive has been ramping up investments in advertising, technology, and supply chains, and it paid off. And Kroger is slashing hundreds of middle management staffers. This is all part of an ongoing leadership evaluation.
Hear breaking news as it happens with live around-the-clock coverage from Fox News on Tune In.
Quarters in Menlo Park. It's 11 a.m. on Wall Street, and Squawk Alley is live. I'm Carl Quintanilla with Morgan Brennan, John Ford at Post 9 of the New York Stock Exchange. Markets obviously enjoying a nice surge to finish the week on a pretty solid jobs number. Investors hit with this recent volatility, though, looking to tech for a hedge. Our next guest says that Apple, Netflix, and Facebook are recession resistant. We're joined this morning by Wolfe Research tech strategist Steve Milanovich. First, though, Steve, good to have you. What a week we've had.
Yeah, it's been up and down. You know, last Friday we had Micron have a tough number, and it's, thought maybe the semis would fall apart this week, but tech is holding in.
Yeah, I wonder, where do you think, how would you characterize sentiment right now, if not on tech, then on FANG alone?
Well, we actually did a survey earlier in the week, and on tech overall, investors are moderately bullish for the fourth quarter and quite bullish for next year. Over 60% characterize themselves as bullish, only 15% as negative. However, they're much more balanced on FANG. So obviously with the regulation concerns there are definitely some worries about FANG. But for the most part, the big cap tech names are holding in.
I got a question for you on sometimes FANG member Apple's headlines out about them this morning suggesting that iPhone 11 demand is better than expected. But I've got two buckets of concern about Apple I'm hoping you can address. On the near-term side, it has to do with supply because of the looming threat of tariffs December 15th. Might Apple be ordering more iPhones to ship into the U.S. sooner to get ahead of that, to last them longer through the cycle? And then longer term, on the demand side, once we get to the back end of this cycle, do you expect consumers around the world, especially in China, to slow down because of 5G and the lack of it in the iPhone 11?
Yeah, so we have a peer perform on Apple, which is essentially a neutral. And it could be that they're ordering more phones. You've also got all three phones available at the same time, which you haven't had in the last few years. It does appear that demand is fairly good, so I think we're through the worst. But as you point out, we do think this cycle is still going to be flat to maybe slightly down in units, and you really have to wait till next year with 5G. Now, I don't think a 5G phone is going to be a terribly different experience, but from a marketing aspect, Best Buy and Verizon and others are really going to be pushing it. So I think you will see a stronger cycle a year from now.
Also with us, Ronald Sloy, co-founder of Sloy, Dahl & Holst. Ronald, I want to get your thoughts on, it's been an incredibly volatile week for the market more broadly, and certainly it's been stoked by these talks about slowing economic growth and whether we could be moving closer to a recession. When you look at the tech landscape, do you see certain names and think these are recession-proof? Heaven forbid we do see a bigger, steeper slowdown.
Well, what I saw, or what I'm seeing, I've actually seen this since September 23rd, believe it or not, or somewhere around there. I'm a buyer of Apple. I've owned Apple for 15 plus years. I think Tim Cook understands the landscape. You know, when Steve Jobs passed away years ago, they said, Apple's lost its zest. I've owned Apple. I've never sold a share of Apple in my client's account or my personal account. And the world is changing, and I think Apple's going to be in the forefront. So I'm a big buyer of Apple. I find it ironic that Apple's up $4 today, but Apple makes me sleep at night. And what's important to me is I want my clients to sleep at night. Paying a 1.8% dividend, the 10-year treasuries, less than that. So I want my clients to go to bed and think, even if Apple stock doesn't move, they're going to get a good dividend rate.
We just showed a graphic that suggested that you've also you're feeling pretty bullish about Netflix as well. Is that the case? Does Netflix make you sleep at night too?
Well, there's a lot of competitive companies coming into that space. You've got Comcast, you've got Disney. I'm still a buyer of Netflix. Is there going to be some competition? I think there's enough to go around for those competitors in that space. Netflix, Reed Haskins, I think is very innovative. Years ago, when he adjusted the price on Netflix, the stock took a little bit of a hit. You can buy Netflix right now for about a 30% discount. I know that Jim Cramer yesterday said that they should take it off the FANG stocks. I'm not selling Netflix right now. I have a tendency to buy stocks that are undervalued. I think Netflix is going to be a player for a long time to come.
Steve, speaking of competition here, this Journal headline just crossing this morning that Disney's banning advertising from Netflix across its networks, and we'll see whether or not it gets harder to book, stars from Netflix original shows in the coming weeks. But does this are the gloves off?
Yeah, you've seen Bob Iger go off the Apple board, so you're seeing a lot of co-opetition and more on the competition side that's coming. My colleague Marcy Ryvicker does have a buy on Netflix. It's going to be interesting. I think they spend $600 million on Seinfeld, basically to assure themselves that they're going to be one of the top 2 or 3 players. So I think if you can stay in that top 2 or 3, you're probably okay. But there's going to be increasing competition. Having said that, Apple's not trying to be the next Netflix. They're really much more about high quality curation and then just the Apple TV app, if you will. So I think over time, they'll find different strategies within the same space.
Steve, what's going on in hardware, and particularly when it comes to the PC ecosystem? Can't help but notice this week HP has got these layoffs going on the same week that Microsoft, which we used to think of as a pure software player, is announcing major hardware, not just for Windows, but also for Android coming up. What's going on in the changes even on the device side of the hardware ecosystem?
Well, hardware has been a pretty tough spot to be in. We had a strong 18 in the PC business, and things have slowed in PCs and servers. The group's finally catching a little bit of a bid here because of the value aspect, but HP's cuts yesterday were much more because of their printer business. Their supplies business is in trouble, and so they're cutting about 15% of headcount. PCs have been actually pretty strong, but Intel's pointing out that there's been a little bit of a pull forward into the first half. So I think PCs could weaken as we go into next year. Microsoft, it's always been strange that they've been in hardware in the first place. Surface has done relatively well. I don't think it matters that much. They're trying to even sell it with Office a little bit there. So I think now that cloud's really driving Microsoft, hardware is a little bit of a side project for them.
Well, there's certainly been a lot to add to the debate this week, guys. Ronald, Steve, appreciate it. Good weekend to you both. We'll see you soon.
Thank you so much.
Still to come, Facebook CEO Mark Zuckerberg live streaming a surprise Q&A with Facebook employees late yesterday. We'll replay that sound for you in just a few minutes. Dow's up 165 right now. Squawk Alley, we'll be right back.
Hi, John and Pete Najarian here. You have
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
LinkedIn Learning offers more than 14,000 online courses to help you achieve your goals. Its short video tutorials cover business, technology, and creative skills employers look for at every level, all taught by real-world industry experts. And new courses are added every week. Plus, LinkedIn Learning is personalized, recommending courses based on your interests and skills. Start your free trial at linkedinlearning.com. Cancel within the first month to avoid any charges.
Time is money. Or so money says. Well, money.
I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money, and times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $3.99. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $104.9. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
Well, it is Jobs Friday, and although today's report missed estimates, stocks are up as unemployment drops to a 50-year low. And for more on the September jobs report, what it means for markets, we are joined by Sean Matthews, founder and CIO of Hondius Capital and former CEO of Cantor Fitzgerald and Company. Also with us, Simona Makuta, State Street Global Advisors senior economist. Good morning to both of you.
Good morning.
Simona, what is your take on this report and the revisions, given how much of this is due to government versus the private sector?
In my book, this was a decent report. I think given where we are in the business cycle, I think this reinforces the idea that we are slowing, but we are still growing. So I was quite satisfied with the details, especially with the hours numbers.
Okay, and Sean, given what we saw from ISM about the services sector and the signal that that sends about how things are slowing, and then, the on balance, some would say positive information that we're getting out of the jobs report, how do you parse both of those, and what's your take for the week?
I think there's definitely a mixed message that's going on, and the economy is definitely slowing. It's to what degree and what's the trajectory going forward. Markets are trying to wrestle with that. You look at the bond market, it went down and then rallied back. You look at equities, there's an underlying bid that's there. So I think financial assets are looking through this and saying, okay, the Fed is going to be there to ease and ease aggressively, which I'm not so sure they're going to ease as much as the market is building in right now. But for now, you're seeing the market rallying in anticipation of the Fed easing.
Yeah, Simona, to that point, I mean, that is one of the reasons that's been pointed to for this, really kind of whirlwind turnaround we saw in the market yesterday after the Dow was down more than 300 points and then finished the day up triple digits as well, was that the bad news could potentially be good news because the Fed may now cut more than had been previously anticipated. Do you think that's actually the case, especially after this jobs number today?
I think there is certainly an element of that. I think whether it's true or wishful thinking, it remains to be seen. To me, given that the Fed has already cut twice, and given the combination of numbers that we've received this week, and especially the labor market, which still is very strong, I don't see urgency for the Fed to move again. We'll see what signals we get from speeches and from commentary from Chair Powell and others. But overall, the economy is in a bit of a holding pattern.
Sean,
it doesn't appear to be precipitously declining.
Right. Well, Sean, what does this say, do you think, about the environment for business investment? So if we're going to get another leg of growth, it seems like that's important. But the trade environment has had a number of CEOs tell us, they are uncertain which way to go. And then with the labor market as tight as it is at the same time, is there enough slack to really plan on investing in growth?
I don't think so. And if we look at the marketplace, if you're a CEO right now sitting in your seat, you're clearly wondering what's going to happen with the trade environment And now you're going into the election cycle as well. So you'll have two vastly different kind of approaches to business that's out there vis-a-vis candidates who could be actually in the White House. So I think as a CEO, you're very guarded right now. You do have the problem where there's a labor shortage, especially in some key areas, and you're going to just kind of muddle your way through this, which is why I think capital spending is so low. It's low because it's hard to plan for the next 2 years, and certainly if you're going to have a big capital project in place, you got to be thinking years out as opposed to the next 3 months or 6 months. So you can continue to try to hire people in the short run, but the reality is it's now about an election cycle that's in place, as well as a trade cycle, which no one clearly understands at this point.
It's a really good point, Simone. I mean, we've been asking all morning long, what's the difference between the CapEx slowdown and the lack of a hiring slowdown? Should viewers think of it as a CapEx as a multi-year commitment? Once you're in for a long part of the cycle, whereas workers you can hire and fire on a much shorter term basis?
Absolutely, that is part of that. But there is a silver lining in this dichotomy as well. CapEx is a much smaller part of the economy, whereas consumer spending is the bigger part. So I think what you are talking here is this idea of how much upside can you get from CapEx. I agree, none at this point, given these uncertainties. But not having the upside is not the same as being very vulnerable to the downside. And I think that's where the labor market and consumer spending really play a role, because it helps stabilize you.
Sean, you just touched on something, and I want to dig into it a little bit more. Everything that we see going on in terms of this political climate, all of the turmoil coming out of D.C. right now, is that priced into the market?
I clearly do not think it's priced in the market at this point in time. You have Elizabeth Warren kind of emerging as the new candidate in front, which has tremendous problems for the financial markets as well as for healthcare and some other key components. So it really depends on the next 3 to 6 months what happens. But if she emerges as a clear front runner, I think the markets are going to have a tough slog as they work their way through what that really looks like. And if we look at the polling, and it's very early for polling, but pretty much the 4 or 5 Democratic frontrunners are beating Trump now. Those are skewed polls. But certainly it's a coin flip at this point for whoever gets in to compete against Trump. Will they win or not? But if it's Elizabeth Warren again, I think there are some key issues that are out there that are going to have significant implications to asset prices going forward.
Yeah, I mean, try to narrow down what you think tough slog means, Sean, because Sanders' health is now in question. Biden, some argue, has withstood some damage by the White House's approach to this inquiry. We'll see how her poll numbers, if she takes any marginal share, even at this early stage. But what kind of liability is there to stock prices if she's the nominee?
I think you can see 10 to 15% downside risk. And that'll be based on what the thought process is. Can she actually win the office? But if she is the front runner, I think that has to be priced in at some point. Now that really depends on what's going on in the business cycle and where interest rates and how aggressive is the Fed going to be to bolster financial asset prices. But I don't think it's priced in right now. I think people are just coming around to the fact that she is the front runner. I believe she's definitely the front runner at this point in time. And I think asset prices have to readjust pricing because of that.
Simone, your take on the effect of politics and the election cycle on the markets over the next several months?
It's definitely going to be a bumpy ride, I think. Still, I feel in the near term, the most important signal that we are looking for is trade policy. The election is important, but it's still a little bit further away. And I think there is a possibility that we get a bit of de-escalation on trade. I would say even for electoral purposes, there is a reason why you might look for that.
The president is making some comments on trade right now.
Just came out, and they're the best numbers we've had in over 50 years. The unemployment number is down to 3.5%, so that goes way, way back. We haven't had numbers like this in a long time. Wages are up by almost 3%. That's a fantastic increase for everybody out there working. We're very happy about those numbers. The stock market is substantially up as it was yesterday. and our country does well. Europe is not doing well. Asia is doing poorly, to put it mildly, and we continue to do very well with the miracle. But the unemployment numbers just came out, 3.5% unemployment, and that is a tremendous number, the lowest in over 50 years. So very happy, and I think really very important, again, I'll say, wages are up. When I was running, wages were nowhere. They were going down. And people were having 2 and 3 jobs, and they were making less money than they made 20 years before. Now wages are up, so we're very happy about that. One other thing having to do with Poland. So Poland is a country, great people. We have a lot of Polish Americans living in the United States. I've just signed, I will soon be signing and signed certain preliminary applications. We will be giving a full visa waiver to Poland. That means that people from Poland can easily travel there, and people from here can easily go back and forth. They can each. People from the U.S., people from Poland can very easily go back and forth between the United States and Poland. So they've been trying to get this for many, many decades. And I got it for the Polish people in honor of the Polish people in the United States and in Poland. So we're very happy with that, yeah.
The Seattle ship got 4 Pinocchios by the Post this morning for lying.